Opendoor wrapped up the week on a firm note, closing at $3.17 after a day that saw an initial surge on the news of CEO Carrie Wheeler stepping down and the interim leadership stepping in. While there was some late-session profit-taking, the stock still held strong and even managed to tack on another 5 cents in after-hours trading, suggesting that retail momentum remains a powerful driver heading into next week. The $3.50 level continues to act as a stubborn ceiling, with multiple tests but no meaningful breakthrough, yet. And that yet is the key word here, because if the momentum holds and market conditions cooperate, Opendoor could very well push through that line in the sand sooner rather than later. Retail traders continue to be the heartbeat of this story. The stock has been one of the most talked about tickers on Reddit and across retail-focused spaces online, with investors increasingly framing it as a potential turnaround play rather than dismissing it as a short-term meme. That framing shift is critical, because it's where institutional participation starts to overlap with retail enthusiasm. We've already seen hedge fund heavyweight Paul Tudor Jones take a stake in Opendoor, and that's no small endorsement. When a legendary investor known for timing macro cycles and spotting asymmetric trades steps in, people take notice. And then there's Eric Jackson, who has been one of the most vocal media advocates for the stock. He's floated targets as high as $82 and even $100 over the long term. That's obviously not an overnight scenario, but his steady drumbeat of optimism has helped keep retail conviction high while also putting the company on the radar of more institutional desks. At the same time, the interim CEO has been winning some praise in his first days in the role. He's been described as hands-on and proactive, quickly digging into platform issues and engaging directly on operational challenges. That's the sort of visible work ethic that resonates with both the markets and the retail community. Anthony Pompliano, who has been amplifying this story to his audience, even praised the interim CEO for his directness and willingness to roll up his sleeves. There's talk of a potential sit-down interview with Pompliano in the coming days. If that materializes, it could provide another burst of attention and further cement the CEO's credibility at a time when leadership confidence is essential for market sentiment. Now, let's broaden the lens to what's happening beyond Opendoor, because the overall market environment next week may play just as big a role in how the stock trades as anything company-specific. On Monday, investors will be watching closely as former President Donald Trump meets with Ukrainian President Volodymyr Zelensky in Washington to discuss possible paths toward peace in the ongoing Russia-Ukraine conflict. This is a high-stakes geopolitical event, and while the outcome is uncertain, its implications for markets are very real. Global risk sentiment tends to ebb and flow based on these developments. A constructive outcome could lead to a risk-on tone, boosting equities across the board, while a setback or lack of progress could stoke volatility and push investors towards safe havens like gold and treasuries. Why does this matter for Opendoor? Because when macro sentiment improves, speculative and growth-oriented names often see inflows as investors feel more comfortable leaning into higher beta trades. On the flip side, if the meeting disappoints and global uncertainty spikes, it could weigh on momentum stocks, no matter how strong their internal stories are. So, for Opendoor investors heading into Monday's session, it's not just about watching that $3.50 breakout level, it's also about keeping one eye on the newswires out of Washington. The Trump-Zelensky summit could very well shape the market mood at the open. What's especially interesting here is how retail enthusiasm for Opendoor is colliding with these macro crosscurrents. You have a stock with a massive short interest, an energized retail base, and a few respected institutional voices beginning to circle around it. That's the recipe for volatility, but it's also the kind of setup that can produce outsized moves when the right catalysts line up. We've already seen how quickly Opendoor can pop on leadership news, or even just speculation about partnerships like the one with Rome, a company exploring crypto-backed real estate purchases. While that chatter remains unconfirmed, it shows the kind of future-facing storylines that retail loves to latch onto. And then there's the technical picture. The repeated tests of the $3.50 level make it clear that the market is watching that price point as the next big hurdle. If Opendoor can close above it with volume, the path higher could accelerate quickly. Resistance tends to become support once broken, and that's when you start seeing short sellers forced to cover, adding fuel to the rally. The after-hours bid we saw on Friday, small as it was, shows there's still appetite even outside regular trading hours, and that's often a sign of strong conviction among smaller investors. Looking into next week, I think the story is really about patience and perspective. As Eric Jackson himself noted, the run to higher price targets isn't going to happen overnight. But the elements are falling into place: a retail community that feels empowered, an interim CEO who's stepping up visibly, institutional players sniffing around, and technical levels that are primed for a breakout. That's a powerful mix, And if the broader market provides even a modest tailwind, Opendoor could be one of the most interesting stocks to watch in the week ahead. At the same time, investors need to be realistic about the risks. This is still a company navigating a tough real estate environment. Interest rates remain high, affordability is stretched, and transaction volumes aren't what they used to be. The longer-term bull case rests on Opendoor's ability to not just ride retail momentum, but to continue building a profitable, scalable platform that can weather macro cycles. That's where leadership matters most, and why the interim CEO's early days are being scrutinized so closely. If he can demonstrate operational improvements and signal a clear vision, it could help convince skeptics that this is more than just a trade, it's a turnaround. So as we head into Monday, here's the picture. Opendoor is a stock at the intersection of retail conviction, institutional curiosity, technical inflection, and macro uncertainty. The $3.50 resistance level is the near-term battleground. The Trump-Zelensky summit could shape the overall market tone. And in between, voices like Pompliano and Eric Jackson are keeping the narrative hot, while the company itself works to stabilize leadership and operations. It's a rare blend of storylines converging at once, which makes for a fascinating setup. For retail investors, the key is patience, knowing that while the headlines can move the stock quickly, the real story will take time to play out. For institutions, it's about deciding whether this is the right moment to follow Paul Tudor Jones's lead and take a position. And for the company, it's about executing in a way that proves the optimism isn't misplaced. By next week's close, we'll likely have more clarity on all three fronts. But for now, Opendoor enters the new week with momentum, attention, and plenty of eyes watching that critical breakout zone.